All right.
Fingers
Well,
crossed.
I think this is time for us
Yeah,
to
perfect.
start. Let's get started. So,
Yeah, great.
my name is Christelle Damiens. I'm your host today of this November Exportia Lab. So, what we're doing this month, and the Exportia Lab is run on a monthly basis, mainly focusing on giving some useful information and sharing learnings with exporters. And this month, I've decided to talk about how we can ease the cash flow of our exporters community. And that's why I've invited Samara Chandran, State Manager of Radium Capital. And so thanks for being with us, Samara.
Thank you for having me.
And so what we are going to talk about is how Australian companies, so that's a very Australian focused lab today, how Australian companies can accelerate and advance their R&D tax refund from the Australian Tax Office to get access to their cash sooner, and we needed to fund export development. So, so we're keen to talk about that. So we'll have a 30-minute session as usual, and so pretty much we're going to have a Q&A session with you. And maybe what I'll start is if you can introduce yourself, talk about your experience, and maybe about radium, and this way we can know a bit more.
Sure. So a little bit about myself. I've been sort of in a commercial banking, corporate finance background for the last 12 years-ish. And I've been working sort of across different continents. I'm actually from Canada, so I was working North America.
Yes.
So mostly working with, medium to large clients, funding, their any sort of funding that they needed for the business.
Yep.
And then I went to Deutsche Bank to work in Amsterdam for a year on an acquisition project, basically a merge of two banks, and went back to Canada after that. And then I found myself in Australia after that, after a couple of years. So I've been here for about 5.5 years. I've been working mostly at banks and financial institutions. So with HSBC, a lot of companies that are domiciled overseas, and they need lending here in Australia for their Australian subsidiaries. So I was managing that. And then I moved to Westpac and St. George and was working mostly in like the commercial banking side of things. So supporting businesses with their everyday sort of lending needs. And then I came to Radium in February, actually. Which has been very exciting. Radium's been growing quite a bit. So we actually have just expanded into, Brisbane, Queensland, now Sydney, Melbourne, and we're just covering all the states. So that's kind of where we're at. So I'm excited to be part of this sort of growing business.
Okay. Exciting business. So what do you guys do exactly when it comes to R&D tax refund?
So essentially what we do is just give an advance against the refund. So instead of clients waiting until the end of the year to get their funds from their tax return, they're able to access whatever they've spent even year to date. So even if they haven't done a full year of R&D expend, and if they've only spent in the first quarter, we'll provide 80% of that expected refund upfront so that they can get the cash sooner.
Okay, all right. So, and I assume I'm just going to ask everyone on the webinar today, I assume all of you guys know what the R&D tax incentive, and if you're here today, you know what it is about, but maybe we give a refresh on what is asking about, just a brief.
Sure.
Yes.
So essentially it's a federal government scheme for any clients that are doing research and development to access funds back. So they get about 43.5% back of every eligible R&D dollar spent at the end of the year.
Okay. So when they get their approval, so that's when you take it from there, right? So how does it all work with you?
So actually how it works is we work with R&D advisors. So a lot of although the R&D tax incentive, you can do it as a self-assessment. So you can, go on the ATO website and submit it yourself. It's very specific how the ATO wants it to be submitted. So there's R&D advisors with all the big accounting firms and mid-tier firms who will actually prepare it for you. So you don't necessarily need to be approved by the ATO prior for us to fund. Because so for example, let's say this first quarter of the financial year, you spent a certain amount of money, you're not going to submit it to the ATO yet, but what you'll do, or what we do or encourage you to do, is work with an R&D advisor from one of these accounting firms. So they'll verify the costs that you spent year to date, advise us that it's eligible, and that an expected refund of X is going to come in, and that's how we lend to ensure that that's the refund that you're going to get at the end of the year. So you're not submitting it yet, you're just getting it verified by an R&D advisor.
Okay. And so how do you actually assess the eligibility of a business, just to be sure? Because basically I assume you don't want to do an advance on an assessment that has not been fully completed, and then have to ask for the money, advance the money, and then ask for it again, because that's
and that's so there's a couple of things that we look at. We look at the actual expenditure that has been incurred. So we actually only fund based on costs that have been spent. So let's say you've spent your money this first quarter, your budget was, I don't know, $200,000. We know that you're going to get 43.5% of that back if it's verified by the R&D advisor. We do a lot of the commercial checks that a lot of lenders do, checking security in the background, because we do take security over that refund in order for us to lend. We don't really traditionally look at it the same way as a bank. They typically will, ask for the business assets. They'll ask for your house, personal guarantees, that kind of stuff. We look at, are you eligible for the R&D tax and refund? Can we verify the costs that you've spent? And as soon as that R&D refund comes in, we have it as security and as our cash flow. So it'll come into our accounts, pay out the loan and the financing we give you, any charges, and the balance goes to the client. So it's really about verifying your costs. It's really around eligibility, because a lot of clients can be startups. They can be, not making any profit. They're spending a lot of money on R&D. So we're not looking at the cash flow per se, because our security and cash flow is that refund that comes in. That's what we sort of rely on.
Okay. And when you say you work with advisors, who are those advisors? Are they your accountant or your finance specialist advising on that from private sector? Or are they government advisors?
Yeah, that's a good question. We have about 25 R&D advisors, and they're not under Radium. They're actually sort of people that we work with. They are independent advisors. So they're from KPMG, PwC, EY, all the big firms. And then we have the rest are mid-tier to smaller firms that we've actually vetted. So they go through a process to ensure that their work is good, because not all R&D advisors are the same, just like anything else. Not all doctors, not all accountants. So we really vet them. We vet their work and make sure that they can, meet our requirements in order for us to rely on them. So what I'll often do is I'll do introductions to some of them if clients don't have an R&D advisor, so that you can have a discussion, see which ones work for you.
And if, let's say, one of the business here that is here today attending or listening to the recording has already an advisor and hears from you, what should they do? Should they then say to the advisor, contact Radium, or should they contact you straight away and you liaise with the advisor? How does that work?
Yeah, that's a good question, actually. So there's a couple of ways we could do it. I talk to advisors all the time, so happy to have that discussion. I think what's a good way to do it is, number one, check if they're on our approved list. Not necessarily, it's, it might not be that even if they're not on our list, they might not be doing good work. They probably are great. They're just not on our approved list. So we can go through the process to see if they want to be in our approved list. We also offer over-the-top reviews to sort of review their work from one of our approved advisors as an option, which is a little bit less cost. But I think the best way to do it is actually, I like to work with the client directly and say, these are the things we need. And then they can sort of loop in their R&D advisor for any sort of questions around the tax comfort letter that we require. So
Okay.
yeah, it's kind of a joint effort working with them, but really the R&D advisor and the client are the ones working on getting the documents together. We don't really get involved in that, them putting together their documents on the R&D eligibility side. Does that make sense?
Yeah. So how long does that take to basically put everything together? You getting the assessment and giving them a response? Yes, we can vet you. And how long does it take to get the cash?
Yeah, that's most important question. Yeah. I think the longest part of the process is really getting the R&D eligibility, correct, because it's really about making sure that you are tracking your expenses that in a way that can be tracked for the R&D advisor, but also for the ATO. Yep. So that process can be anywhere from a week to 4 weeks. It really depends on how you've been tracking your own expenses so that the R&D advisors can review and vet everything and put in a submission and put things together. So that'll probably be a couple of weeks. It depends on how busy they are. From our process side, there's really only a few documents that we require. There's 6 documents. And then once we receive those 6 documents, it gets sent to our credit and operations team. It gets approved within 48 hours. So that's when we do all of our checks on credit scores and all that kind of stuff. The documents then get sent via DocuSign to the directors. So that's all email. So it's right away. And then funding is within 48 to 72 hours. So typically from application to funding is about a week and a half max. So it's pretty quick. It's all done in an online platform. So everything's done on a platform we have to the submission. So it's simple.
Yeah. And so what does a business, you mentioned 6 documents, and what does a business need to provide to you typically?
Yeah, so the 2 letters from the accountant. So one is that R&D comfort letter advising us on the eligible R&D spend and the expected refund. The second one is the tax comfort letter. So that's from your tax agent, whoever that is. It doesn't really matter who your accounting firm that you use, but that's outlining, have you been under review with the audit? Do you have any ATO liabilities? And ensuring that, the funds go to us when we're taking security over it. And then the other documents are your prior year tax return, and also 2 BAS statements, which are like ATO portals to show us, whether there's any ATO liabilities outstanding. And if you've utilized the tax refund before or the tax incentive before, there's another letter called the prior year tax registration letter, which you'll have on file. So it's basically 5 of those documents are pretty simple to get. The R&D tax comfort letter is the one that takes a bit of time to get from your R&D advisor. Yeah.
Would you, and I'm just going to ask everyone if they have any questions they can start to put into the chat or into the Q&A.
Yeah.
But would you have an actual case or an example of a company you guys have helped? In terms of the size, the time they saved, and how it's helped them.
Yeah. So we have quite a few case studies on our website, and I'm always happy to share them as well. But one that kind of comes to mind of how a client has used us to increase their R&D spend and increase their R&D projects is Recce Pharmaceuticals. They're actually a large ASX listed biotechnology firm. They were basically had created an antibiotic, and they were trying to increase their spend and increase and accelerate their manufacture. So they came up with a product. They were trying to accelerate their manufacturing of the product to sell across the globe. And with those type of industries, it's really about first mover advantage. They need to get to market quicker. They spend a lot of money in R&D. So they had a budget of about 1.6 million, I think it was, in terms of R&D spend for a year. So what they did was they used us on a quarterly basis. So the first quarter they spent some money, We advanced a portion of that expected refund earlier. So then they had additional money to put back into the R&D refund, or sorry, into the R&D spend the next quarter. So they ended up basically cycling that cash through every quarter. So when we give them money, if you take our funds and spend it on R&D, we know that you're going to get an additional amount of refund at the end of the year. So that additional spend will result in an additional amount of refund, meaning that, okay, you've spent it again, you have an additional amount of refund that's coming at the end of the year. We can lend again 80% against that spend that we've given you.
Okay.
It's a sort of a factoring approach. So what happened was they ended up increasing their spend about 55%, which also increased because they spent more, they have a higher refund. So they increased their refund by 33%. So they were able to get to market quicker. They were able to get revenue quicker, but also because typically, you know, they would be going out to sell shares to raise capital. That's usually what they do. So their share price would get diluted. But with us doing this process, what we saw is that their share price actually increased because it's a non-dilutionary form of capital. So that's one of the examples. You know, another example just quickly is if you want to sort of reduce the amount of capital you're putting into your project, you want to keep some of that equity, put it aside to different projects. You can use us to sort of manage your budget by getting this additional capital from us to sort of fill a gap. So let's say you have a budget each month, instead of putting all of your budget into the R&D, you know, some of that to yourself and put that towards other projects in your business or, you know, in that equity. Export, exactly. Exactly. And then, you're able to sort of use capital a little bit more strategically. So you're reducing the amount of capital you're putting into your projects. So that's another way to sort of manage your projects.
I might ask you a smaller business example after, but we have a question from Judy. And she's asking if there's any fees or interest for this arrangement to work with you, like a lending cost, or basically how do you get paid?
Yeah, exactly. That's a great question. So we've set it up in a way to protect your cash flow. So we do charge a fee. The first fee is the $699 plus GST, $690. That's taken out of the loan advance. So only if you get approved, we take it out of the loan advance when we fund. The next fee is we charge 1.25% for all of our first clients per month. So that interest rate is based on when you get the funding. So let's say you were to get it in the beginning of the year and your refund comes in, I don't know, August or something. That's about 8 months. So it could be around 8 to 10%, which sounds high, but the interest is actually capitalized. So how it works is we only lend 80% of the expected refund. So that balance of 20% will be able to cover your fees and charges, and the balance will go to yourself. So you're not paying anything through the term of the facility. It's all at the end. So you don't have any monthly repayments. It's just when the refund comes in, it pays out the interest, the refund, or sorry, the loan, and then goes to you. So those are the main fees. We are, from what I understand, the cheapest in this sort of space for this type of lending. So we try to be very transparent with all of our fees, which some of our competitors will charge a large upfront fee. So that's just something to, you know, ask about and keep in mind.
If anyone has any question, just go ahead, guys. Otherwise, I wouldn't mind an example of a small business.
So we deal with clients all across the board. So we deal with a lot of startups, and we deal with a lot of companies that have been around for a little while and sort of looking to move to that next stage. One of the examples I'm thinking of is a company called Goldilocks Suit. And it's just one that just sticks in my mind. They're basically created this baby onesie that measures temperature, and you can track like everything on their app, you know, how they're eating, how they're breathing, how their temperature, like everything. It's very different. I've never heard of it before, but it was very cool. And so basically what they were able to do was they started, you know, marketing their business. They spent a lot on R&D, and they started getting a lot of, you know, orders, but they had spent so much that they weren't able to fulfill those orders and didn't have the cash
Yes.
to do that. So what they did was they used us to sort of get an advance again that R&D spend that they had, and sort of, be able to take that cash and put it towards manufacturing their products.
Yeah.
And so they literally told us it was the difference between them closing the shop, closing their doors versus, growing and being able to get that next step.
Wow.
And because it's really quick to access, I think that's a big thing. From a banking lending side, it can be very difficult to get capital quickly in this sort of market. So this is an option to access capital quickly.
Yeah.
Yeah.
That's great. It gives an additional option to those companies.
Yeah.
Right? It's really good.
Right.
Yeah. Is there any advice? I mean, if no one has a question, is there any specific advice you would give to a company looking at using this facility? Any learnings that you've had? Some companies didn't access it because of things they've done not quite right, or any advice you would recommend?
I think right now, I think it's a lot of times it's hard to get capital from investors. It takes a lot of time to market, and that's what a lot of our clients are looking at. They've been speaking about that. And I think it's really important to think about lending in a more strategic way. A lot of the time people get hung up on costs, but don't see the benefit to the business. What is that? What is the difference between having, that capital in your business working for you versus not having it there and waiting? What does that impact your business down the road, especially if you're trying to export to, overseas? You need that sort of those funds to get to the next step. I think it's worthwhile to also get a good R&D advisor on your side, because, even without lending, just from that perspective, they're able to actually also give you advice on all the, export development grants. They're able to give you advice on all the, modern manufacturing grants, all those ones that can be challenging to navigate through the government system.
Correct.
So by, getting an introduction to one of those R&D advisors can actually help benefit your business to get that capital in. We've seen a lot of our clients being able to, get through those hard, difficult times, especially with COVID and all these uncertainties. And now as things are sort of opening up, hopefully next year, there's a lot of opportunity. So having that, cash and that, additional, funds in your back pocket will actually help you to take on those opportunities, I think. So I mean, looking at things a little bit differently, seeing it as a more strategic way of accessing funds is something that I think people need to, have a better understanding or focus on, because that really helps you grow your business. And the other thing is, when I was mentioning how you can reinvest into your business with this capital model, where you can take cash and sort of cycle it through, because you're, spending more, what actually happens is that the funds that you get, the increased refund that you get from the additional spend, can cover your lending costs. So people actually cover their lending costs by, spending more. So that's kind of the advice I'd probably give, for anyone sort of doing any R&D.
Great. So let's have a look on how so I'm going to share your contacts, but basically, so the people we have today, they're not all, some of them are in Sydney, some of them are not, some of them might be in Queensland. So how can they get an assessment, and practically, do they just email you your contact?
You can just call me or email me. I'm always happy to have a chat. We have state managers in each of the states. So what I usually do is connect you with one of those guys, or just they'll be able to sort of take it from there. There's also a lot of resources on our website. We have newsletters as well, just around investing in capital and all that kind of stuff. So worthwhile checking out. But just email me, call me. Happy to have a chat with someone.
Yes, great. It's always good to have that direct contact, and making sure that the request is handed over, to the right person in a timely manner. So thanks for that. Thanks. So guys, if you don't have any question, we are going to wrap up. I really appreciate your time. I think it's very valuable what the service you guys provide for our exporters. They all invest a lot in their IP, and they all have a lot of investment to do to grow their export as well. And it's important to us that, you know, innovative companies export for Australia as well. So we're very keen to support that. So thank you so much for sharing
so much too.
your tips, experience, and that was great to have you, Samara.
Thank you so much for having me. And yeah, if there's any resources you want me to send across, let me know. Happy to share.
Yes. So what we'll do is that we will send a follow-up email with your contact details.
Yeah, great.
If there's any link to any specific information on your website, we'll send it in the follow-up email too, with a recording of that session. And so that so Leo will look after that. And I just would like to let everyone know that we'll have our next Exportia Lab will be kind of an open session to prepare 2022. So if you have any question that is really, so it'll be held on the 7th of December. And if you have any question, any issues you'd like to discuss, I'll have my take on, you know, how to get ready for 2022 in exporting to Europe, but feel free to come with your questions and come with your issues. I'll be very keen to discuss them. So thank you everyone for joining, and we'll see you next month. And Samara, we'll see you very soon.
Thanks, guys. Have a lovely rest of the day. Bye.
Bye-bye. Thanks everyone for coming.